Competitive Devaluation of Forex Currencies by www.theforexnittygritty.com. Today in the world of Forex exchange trading, there appears to be a competitive devaluation of Forex currencies. That is to say, more and more central banks are buying other currencies, setting low interest rates, or running up debt as a means of reducing the value of the home currency. To understand how this competitive devaluation of Forex currencies will play out, let us first look back in history. As Japan rose from the ashes of World War II, it built its economy on exports to North America and Europe, and later to the rest of the world. Cheap and poorly made products were the first wave, and then Japan emerged as a maker of high-end electronics, automobiles, and more. When made in Japan was meant cheap, it was easy to sell low-priced goods to willing customers, in the USA especially. When Japanese goods improved and become more expensive, Japan had to find a way to keep prices down and exports up. Thus, Japan bought foreign currencies, primarily US dollars, and by way of currency manipulation, kept the yen low and kept its exports flowing. To a great degree, the current competitive devaluation of foreign currencies is an attempt to follow the Japanese model. But how is that going to work out? And what should someone who speculates on foreign currency rates do to profit in the coming weeks, months, and years? What is good for one is good for 2, 3, or 4. Currency devaluation as national policy worked for Japan and then for Taiwan, South Korea, and mainland China. The problem may have started when China industrialized and started trading with the rest of the world. Its economy grew and attracted investment. China flooded the world with underpriced goods and may well have been part of the cause of the worst recession in 75 years. The result of the recession was and is that North Americans and Europeans are buying less from China, South Korea, Taiwan, and Japan, and thinking seriously about devaluing their own currencies. The stated reason for devaluing Western currencies is to stimulate Western economies. However, a beneficial side effect of these policies is to make it profitable to bring industry back to the West. Now we are not talking about half a dozen strong economies manipulating the currency markets. We are seeing the USA and EU, far and away the two largest economies in the world, seeking to devalue their currencies. Who will win this competitive devaluation of currencies? And how can a Forex trader make a profit? Long-term trends and short-term detours. Fundamental analysis of Forex pairs tell us where the eventual relative values of a currency pair will stand. Technical analysis of Forex pairs is essential to short-term profits. If the major economies choose to devalue their currencies, then we can expect to see the US dollar and euro being substantially cheaper over time. However, when the US decides to ease off on its stimulus program, for example, expect a short-term rise in the value of the US dollar as interest rates rise in the USA. For more insights and useful information regarding the Forex markets and foreign currency trading, visit www.theforexnittygritty.com.